So welcome back you Alibaba bulls. So as we all know last week, this entire Suning acquisition has caused a very big hoo-ha, and it has especially been reflected in the entire share price itself, where it made a very huge recovery to around $230 and then now it plunged back into a $210 range. So I'll dedicate this entire video just talking about my perspective and just sharing with you why am I still so bullish about Alibaba, and I think that it's a very good strategic direction for Alibaba moving forward. So before I start, I did create a Discord channel, so it's for anyone that's interested in joining this very small Alibaba community. So we talk everything Alibaba related, but more importantly, we also share our different positions and our different understanding on things ranging from Bitcoin all the way to different US equity positions as well. So for those of you who are interested, please click the link in the description box down below. With that, let's get right into this main point of discussion today, which is Suning.com. So essentially speaking, I believe that for those of you who have been following related news to Alibaba, we'll know that they are currently in talks in leading a consortium of trying to buy out the entire Suning.com. So I'll be explaining a little bit later in this entire video itself and my opinion and my take on this entire acquisition itself. And just to tell you guys, nothing is set in stone, but I actually do hope that this entire consortium will play out and they essentially take over Suning.com, and I'll share with you why later. So in this entire Yahoo article itself, it states that Alibaba-led bailout of China retailer draws Haier Xiaomi. So this article states that China's major home appliances maker Haier Group Company and Xiaomi Incorporated are among investors considering joining Alibaba Group Holdings Limited in a mega bailout of cash-strapped Suning.com company, according to the people familiar with the matter. So negotiations are still ongoing and could be delayed or fall apart. So Suning.com is one of China's biggest retailer of appliances, electronics and other consumer goods, had a market value of around $52 billion yuan, which is $8 billion US. So it's been in trouble for some time. The retail business has weakened with the initial slowdown in spending during the pandemic, and concerns about its cash flow intensified in September when Zhang waived his rights to a 20 billion yuan payment from China Evergrande Group, the world's most indebted property developer. So the stock tumbled to a nearly 8-year low in Shenzhen in June after a Beijing court froze 3 billion yuan worth of shares held by Zhang. So essentially speaking, what you can understand Suning Group as is one of China's biggest retailer, and if you really like to draw comparisons in the American counterparts, you can look at it as something like Walmart or Costco, but more focused in electronics and more focused in appliances, rather than just providing you with all your general grocery products and stuff like that. So you can look at it with more of a technology slant. Essentially speaking, as we all know, as digitalization occurred, as e-commerce, as globalization occurred, this entire idea of asset-heavy business is highly frowned upon. A lot of people love software companies like Microsoft, like Google, like Apple. A lot of people hate companies that are bogged down with assets. And traditional companies like Walmart and Costco still has favors of different Wall Street partners, because they believe that they still have a very strong economic moat where there's a very high barriers to entry and a lot of competitors cannot easily come in to take over Walmart or Costco's share. So particularly in this case, Suning is currently cash strapped and they have a lot of cash flow and liquidity problems, which is also why currently Alibaba is in the talks of trying to bootstrap an entire cap consortium to buy out the entire Suning business itself. And just to provide you with a little bit of context, Alibaba currently holds around 20% equity stake in Suning. So looking at this in greater perspective, there's another article which I think provides a more in-depth idea and in-depth analysis, which is in congruence with what I think Alibaba is going to achieve out of this entire buyout itself. And let's look into what it says. So Alibaba nears first big deal since record antitrust fine. So Alibaba Group Holding is poised to make its first major investment since it's paid a record antitrust fine as part of bruising crackdown on Jack Ma's internet empire. I honestly do not know why all this US publication will have to keep harping on the idea that they just got fined. I know they got fined, they paid their fine, move on guys, stop harping on this nonsense fine. So anyway, the deal would add up to 20% stake that Alibaba already owns in Suning.com, one of China's biggest retailer. So the potential investment could mark a comeback for Alibaba. Oh, interesting. What does it mean? So the deal would help the e-commerce firm encroach on top rival JD.com Incorporated traditional stronghold of electronics, while joining hands with local authorities, signal the tech billionaire and his companies are ready to get back to deal making. So just in this sentence itself, there are two major concepts that needs to be discussed, and I would like to break it down in further granular details so that you do not have any misconception of this, what Yahoo is essentially saying about this entire deal itself. So firstly, they talk about it will be a very good addition to the entire e-commerce business of Alibaba, and it will be a direct answer to the competition, which is JD.com, which is what they're currently doing in their business model. And in the second part, I'm talking about the tech billionaire and his company making a comeback with all the different governmental relationship. So let's break down the first idea. I actually totally agree with the first idea because essentially speaking, Suning.com actually has a very strong market presence in terms of a lot of their retail shops and in terms of their entire market outreach, all the different physical assets they have right now in China itself. So in order for Alibaba to go about trying to expand and expound on their capabilities in the e-commerce arm, they are now also looking into transiting back into the retail industry and also have a minimum amount of presence so as to fight off its competitor, which is JD.com. Currently, JD also have very streamlined operations. They also have very strong warehousing capabilities. They use smart technologies to adopt in terms of the entire delivery network itself. And if I'm not wrong, based on my own preliminary research and preliminary understanding of Suning.com, Suning actually also do have similar technologies, and they also look into how they can integrate this entire process and try to streamline the entire delivery network itself. However, I do not believe that Suning is on par with JD.com based on my own research itself. JD.com is currently expounding a lot of different innovative ideas which might have a very huge potential in the near future. And Suning right now is really just considered the market and industry standards. What I think Alibaba's management team is currently devising or concocting is essentially just discarding whatever they do not like about Suning and just integrating all the integral parts of Suning back into their ecosystem to try to compete, and it's essentially just an answer to the direct competition of JD.com, which I thought was extremely opportunistic, yet at the same time I love the management team so much because they know how to take advantage of the environment, they know how to take advantage of their competition as well. Ultimately, I'm extremely hopeful and extremely optimistic of this takeover. Ultimately, I would love for them to acquire Suning because I think the synergies that they are going to value add into the entire Alibaba ecosystem is limitless, and it's going to be a very huge value proposition so as to kick off the competition, for example, JD.com. Anyway, looking at the second part of this proposition in this entire sentence itself, I actually do not wholeheartedly agree with what they're trying to portray. I have always been saying, and I will reiterate again, that the current government relationship with Alibaba is not a sour one. The Chinese Communist Party do have the different priorities and the different industries and the different segments itself, but they do not hate Alibaba as a business. And on top of that, by striking deals with their local authorities do not mean that they have a direct relation with the Communist Party itself. You can look at China as a very big country, and in the top line in all the senior officials in the Chinese Communist Party, most of them do all the strategic thinking, do all the management of the entire country itself. They set the 5, they set the 10, they set the 15-year goal, and they look at where they're going to bring the entire country. Yet at the same time, they have a lot of local authorities essentially governing the district and the jurisdiction of that hypothetical plot of land. You can look at them essentially like the governors of that piece of land. And by having a good relationship with the local authorities does not mean that you have a good relationship with the senior officials, because from what I understand, most of the time the local authorities and the senior officials have a disconnect, because as you all know, in a hierarchical structure, especially in the government sector itself, the red tapes and the amount of bureaucracy is insane. So it does not mean that your local authority likes you means that the senior officials of CCP loves you, which is also why I suspect in the NIPO itself, Jack Ma might have a very good relationship with all the local officials, and especially for those that are governing the IPO side of things. But at least from the senior officials' point of view, they might be on a different page, and which is also why Chairman Xi essentially stepped in to stop the entire NIPO. So by working with local authority does not mean that you are with a good relationship with all the governmental structure in the entire Chinese Communist Party. Because you have to understand, China has 1.4 billion population. The amount of politics even within the entire political system and political structure will be massive. So do not just take it at face value and just assume that hey, their relationship has repaired, they are on a good terms again. So I would retain my optimism from this point of view. But back to just speaking about the business itself, I think Suning.com will be a very good addition to the entire Alibaba ecosystem itself. So back to the article itself, should the deal proceed, it strengthens the case that Alibaba isn't allowing regulatory overhang to constrain its strategic ambition or opportunistic investment. So like I said, I retain my optimism, but they do in a way, in principle, approve the opportunistic investment. And like I said, I think Suning also has a pretty huge market presence. And in order for them to go illiquid and really just lose this business, that would be of detriment to the entire country itself. So by Alibaba stepping in, first it helps Suning.com, secondly it also augments the entire Alibaba ecosystem. So I guess in a way it's a win-win situation. So the potential strategic value of Suning store, distribution center, and last mile delivery stations to an increasingly omni-channel Alibaba is clear. So I really love this entire sentence, and with that, I actually give it a different color right now because it really succinctly put across the value proposition of Suning to Alibaba Group itself. So any deal will likely need to be approved by the state administration for market regulation, the increasingly powerful antitrust watchdog in Beijing. So even as Alibaba attempts to move on, Ma's fintech arm Ant Group company is still undergoing a painful state-ordered transition. So negotiations are ongoing and a deal could be delayed or fall apart. The rapid expansion had fueled concerns over the group's liquidity, which were exacerbated after the billionaire in September waived his rights to a payment from China Evergrande Group. This is with regards to Suning.com. So the embattled firm has a strong physical retail presence in China, especially in the eastern part that includes financial center Shanghai. Among hypermarkets, it has the 5th largest nationwide share of 4.4%. So Alibaba also has the biggest share of 13.7%. And a consolidation of Alibaba's unit would pose a challenge to other players like Walmart Incorporated China's operation, currently in 4th place with a 9.3% market share, which has a tie-up with JDs.com in its online operations. So Alibaba and Suning have long been closely allied, forming a partnership in areas ranging from logistics to online sales. So in 2015, Alibaba invested 4.6 billion. And it tumbled about 60% even as Alibaba stock more than doubled. So the partnership with Suning and other brick and mortar retailers are part of e-commerce giants' goal to build an empire. And the strategy is now called New Retail. Alibaba's chief executive has made expansion into physical retail and the grocery business in particular a cornerstone of its growth strategy. So alongside investments in traditional retailers, the company has made a push into offline world with physical stores for its Fresh Hippo grocery and food startup. So a larger stake in Suning could help Alibaba fend off growing competition from JD, and the segment accounted for just over half of JDs.com's revenue in March quarter. So Alibaba already holds a 20% stake in Suning, and both companies have been collaborating to develop new ways of shopping for consumer electronic goods by consumers in mainland China. So an increased stake in Suning.com could facilitate such collaborations and raise Alibaba's share of online retail sales for consumer electronics, which currently trails rival JD.com. So some of you might ask me, if they are already such a huge stakeholder of Suning, why do they still bother about forming this consortium and essentially trying to take over and acquire Suning.com? And as you can see, I think right now the partnership between Alibaba Group and Suning.com is of a rather healthy one, and they have been undergoing a lot of different collaborations among the different stakeholders involved and in this entire strategy itself. And with Alibaba having more equity stake in Suning.com, essentially just means that they have a much greater saying power and a much greater power in negotiating what they want Suning to help value add in Alibaba's ecosystem. And I think like what the article very succinctly put, Suning's assets in terms of its store presence, its distribution centers, and its last mile delivery stations are really pivotal, and they are very integral in the entire ecosystem itself in trying to help fend off competition like JD.com, because this is essentially what Alibaba is currently lacking in. And like I speculated in one of my older videos, I did say that because JD.com is currently bleeding in terms of its logistics and delivery network itself, I did hint to the idea that hey, they might actually eventually take over JD.com logistics and distribution network, which essentially just crippled the entire JD's business and its economic mode. But I think JD.com would be probably the next stop for Alibaba, but right now I think Suning.com will have a very good augmentation to the entire system itself and to help value add and to help boost the entire value proposition of Alibaba's e-commerce arm. With that, I hope you gained some value from this video. Do share with me what are your thoughts on this acquisition itself, and because the share price essentially plummeted down last week, because whenever there's uncertainty, there's volatility. Some people might take it as a good news, some people might take it as bad news. So by and large, I think that it's still a very good opportunity to buy Alibaba stock if you have not entered, and it's also a good time to dollar cost average if your buying price is extremely high. With that, I hope you gain some value from this video. I'll see you in the next video, but more importantly, I'll see you on the moon. Goodbye!